Have you reevaluated the risk of Brexit to Barclays given the hard approach Theresa May has taken and the similarly hard line Brussels has taken recently?
Politics is a very different world than business. What I would say is the level of dialogue with the Prime Minister's office, with her government, with the Chancellor, with the regulators has been really quite something. I think there's a lot of listening on both sides. We're a British bank. We're here to support the United Kingdom. But also, we're the largest underwriter of European sovereign debt. So France is very important to us. Germany is very important to us. As I said, we have a large credit card business. We have bankers and salespeople all across Europe. Continuing to engage with Europe is important for us. We think it's important for Europe. I think there are, just like having to set up the intermediate holding companies in the United States to continue to do investment banking in the U.S., the European Union is going to require us to set up structures across Europe that make it more robust and more within the fold of Europe. That's okay.
You know what I'm getting at, though? Does the hardness of Brexit determine how great the impact is on a bank like Barclays? Pardon me.
There could be decisions taken that might not be in the best interest of the free flow of capital. But I think one of the tenets of the G20, if there were a couple of things that came out of the financial crisis as a positive, one is, I think, the coordination of the G20. And one of the things that the G20 stuck to is, as we re-regulate the financial industry, let's not inhibit, by putting up barriers, the free flow of capital. So long as those barriers are not put up, there will be workarounds around Brexit so that London will remain a very important source of capital for continental Europe.
Relative to some of your peers on this subject, you're an optimist. At least you're constructive. What's the upside to being optimistic? What gives you that degree of confidence that they don't have?
Well, I'm just expressing what I think. So I don't think it's optimism or pessimism. It is what I think. And we have a bank subsidiary in Ireland that's got that is part of the European Union. We have 1,200 employees today in continental Europe, from Milan to Paris to Frankfurt to Madrid. There will be uncertainty. But having been in the financial industry as long as I have, it's amazing how creative the financial industry can be. Now let's just make sure we do it in a very safe and sound way.
There's less than a month to go before the UK election. Given the alternative, right, which we'll call uncertainty, would you say it's accurate to say that a decisive victory for the Tories, presumably, would be good for the British economy, good for the pound, and by extension, good for Barclays?
I don't want to insert myself, particularly as an American, in the British.
It's not about politics, right? It's about what's good for the bank. Because it's you could have certainty, or you could have uncertainty. If it's a decisive victory, there's some certainty there. The government has given everybody a pretty clear idea of the path it's planning to go down. Right. And if there's uncertainty, that could be problematic.
Obviously, a strong economy is good for Barclays, and certainty helps corporate investment, which is a fuel for economic growth. I'll say we enjoy a very, very constructive dialogue with the British government, and as I said, I've been very encouraged by the openness, by the candor, by the exchange of ideas and information. So, but who's ever in the British government, what's important is that Barclays stand behind the UK.